Good evening and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for November 21st, 2009. Our website is blog.accendotrader.com where we put together effective video technical analysis trading plans on a daily basis. Again, as Accendo Traders, we are a firm believer in trading plans that help us stay in the know of what could affect our trading positions, our open positions, and we want to know what's coming down the pipe that can move the market one direction or the other. But being focused and disciplined also cuts down on our research time, which allows us to spend time with our family. So, the week that was, well, it was blah. The Dow only ended up 47 points for the week. The S&P's down 2, the Nasdaq's down 21, so it's a pretty light week as far as movement. Now, what we've been talking about really for the past 2 weeks, maybe even 3 weeks, is where has our volume gone? The week did start off with a boost. The S&P reached fresh highs for 2009. A lot of that was correlating with the dollar. But we very quickly came back the other direction after that big move on Monday. We saw basically third quarter earnings basically wound down economic data, although there was some interesting things. Nothing really moved the market. Again, the biggest catalyst for the week was the U.S. dollar. And the U.S. dollar was kind of all over the place, down, hitting fresh lows, and then rebounding on Thursday and Friday. But again, the question is, where has the volume gone? Where has sentiment gone? Where has conviction gone? We find that in volume, and we haven't seen that. And again, we even had some, what used to be moving news. We had some news from Dell, we had some news from Target, Home Depot, Walmart. But right now, the traders are not, being, impressed, or they're not moving the market on the news. They're just kind of still staying on the side. And next week might be even lighter because of the holiday, Thanksgiving next week. So next week we do have something. I mean, we do got GDP on Tuesday, which could be interesting. And then we have a ton of things on Wednesday. Crude, initial claims, personal income spending, PCE. There's a lot of things on Wednesday. Trying to crash it in before Thursday's Thanksgiving. There's also K-Shell Home Index on Tuesday, and the FHA home data is on Tuesday. But overall, when it comes to Monday, we've got existing home sales, no earnings before the market, Hewlett Packard's after the market, and remember, Hewlett Packard already pre-announced their earnings, so this would be a sell the news. We already know. We do have Deere this week, but what we want to pay attention to, of course, is down here at the bottom. The market is closed on Thursday, and then we have an early closing on Friday. So as we take a look at the daily chart, we see a couple things. First, what have we been talking about for the past several months? The beautiful swing highs. Nice bounce off of 50. And then we kind of shrunk it down for you so that you can see this downtrend line. And if we keep going back, it takes us all the way back to the October highs of 2007. And as we match up those lines, depending on how you match up those lines from these swing highs of the downtrend, you can say that we either are just at the top of it, getting ready to break out, or some people, and when I originally said we popped out of it, but it looks like we're just basically at the top of it as we come back down, which okay. But the question is going to be, and again, this is that conviction that we're talking about. What's going to be our catalyst? Can we get a break out of this? Usually what happens is we do get a good thrust when we get into this channeling type pattern. So we may come back down to and then go back up. We'll see. As always, what is going to be the catalyst? Let's switch over to the NASDAQ. With the NASDAQ, for the past month, we've been talking about a potential channeling pattern at this 2200 level and down here at about 2000. We did get at the beginning of this week, got a pop up out of that, and then now we've come right back into this consolidation range. And remember, our other story has been what's going on with the volume, but we'll talk about that on the internals. So what do we see with the NASDAQ? We really don't see any conviction at all. At least with the Dow, we have the beautiful upswing, and we do have an upswing on the NASDAQ, but it's not as clearly defined anymore in the past month. And so we still see consolidation here in this NASDAQ pattern. Switching over to the S&P 500, we are also seeing a beginning of not a distinct high and a potential channeling pattern. You know, we've had a great move from the March lows, so the market, in my opinion, again, is looking for a catalyst. We did see an increase in volume, but that increase in volume is on what? The days down, and this big move up for November was on volume going down, and our technicians know that that's technically a bearish pattern. The move up on lighter volume is bearish, and then when the volume increases, we're on the down days. Let's switch over to the monthly charts just to get a long-term view. And you can see that the S&P was well on its way to the 50, and we've kind of settled off here. Doesn't mean we're not going to get there, but again, what's going to be our catalyst to move us higher? The NASDAQ's already above the 50 moving average, and it also looks like it's pausing. Kind of pausing with these wicks here from 2008, and also pausing right here. So there is some, you could say, resistance support at this 2180 level. And for the Dow on the monthly chart, we can see that we are at the 50 moving average. We actually touched it probably on that Monday, and you can see that downtrend line coming down. So again, what's going to be our catalyst? What's going to break us out of this wedge from the March lows and from the downtrend from October highs? So here we are looking at the market internals, looking at what that volume is doing, and you can see again, going back to early November, we can see that if the number is red, that means lighter volume. You can see for the most part we consistently had lighter volume each day. Little increase, but then the rest of last week we had lighter volume. Little increase, and then once again the volume went down, and then Wednesday was our first down day, volume increased, and although volume did decrease today, again the volume picked up on the down days. Looking at the breadth, we had 2 consecutive negative breadth days, and we can see that for the first time in a while we had 4 consecutive days of more declining stocks than we had advancing stocks. So again, definitely weak sentiment, definite bearish sentiment. But again, we haven't had really blow away volume to really say we're really going down. The volume is leading us that way. We have a bearish tint, but we need more volume to really say that this is what the market wants to do. And as we come into a holiday shortened week, maybe we'll see something on Tuesday. Certainly most people are going to be done trading Tuesday as they want to get ready for the Thanksgiving holiday. But again, we need to see conviction. We need to see volume. We need to see what's going to be our catalyst to move the market. So we're going to move on. Trading Zone, Mark Douglas, and we're kind of finishing up our comparison of traders to gamblers. And what's important to understand, and this is the whole thing about having a trading plan, being disciplined, and not letting your emotions control your trading, and that is coming to the understanding that each trade is independent of the next or the one in the past. And we can't control the results because, as we talked about in our last video, there are a different set of traders every single day. No matter if you're trading the same stock or a different stock, a different set of traders are forming this pattern that we see technically. So we can't control the outcome. What we can do is make sure that our trading plan and our system puts us in a position to be successful over a period of time. So you have to have a large enough sample, you have to have enough trades in your system to know whether or not you need to make adjustments or whether or not it's working. Just like in baseball, if you go 0 for 3 today, that doesn't mean tomorrow you're not going to go 4 for 5 and then have a 500 average. So use your indicators, use your system to put yourself in a position to be successful, and then trade that independent of the results before and after, and make adjustments when needed. You guys know we have a great futures trading room, and they have a 10-day trial for $29. Awesome room. Alex is a great leader. If you're getting futures, great broker, 20 free contracts if you join up through us. And we have a good ebook for you that will help you set up your day trading routines, pre-market and after-market. Please come join me tomorrow for our Jumpstart Your Trading Week session at 8 o'clock. And I think I'm out of time. So, guys, I will see you next time.